So in this swing trading video, we are going to look into ICHIMOKU Cloud and how you can use the basic Kumo breakout setup for taking swing trades in the market. So in this video, I'm going to show you how to use a multiple time frame strategy, and we will be discussing about entry, exit, stop loss, and I'll also be covering stock selection in great depth. So let me first show you how to apply ICHIMOKU indicator on the chart. So at tradingview.com, go to the indicator section and here look for ICHIMOKU indicator. Now this is a default indicator that is built in. So you just click on it, close this tab, and indicator now will be applied to the chart. So once you have this basic chart setup ready, you then have to ensure that your time frame is set to 15 minutes and you can change the symbol from this section. So the basic rule for Kumo breakout has already been covered in 2 videos. In case you have missed those videos, link to those will come up at top right end of your screen. So once you have this basic chart ready, I also like to include the volume indicator. So just click on the indicator section here, scroll down, and you would find the standard volume indicator. So click here and volumes would come up on the chart. Now, since this is swing trading and you have limited time in your hand, you're looking for precisely timing the trade here to perfection so that price moves in the direction of your anticipated trend. So there are instances where, if you look at this instance here, even these points where price is trying to move above the Kumo cloud, but it somehow fails to do so. So I'll be showing you how to counter this using a multiple time frame strategy, and will be explaining the rules clearly. So the basic setup of Kumo breakout states that as price starts to move above the Kumo cloud here, you take entry in the trade and set the Senku B level as the stop loss. So the basic rules as such work really well. It is just that you have to work on 2 key elements here. Number 1, identifying the trend currently. For that, we will be using multiple time frame charts. And number 2, with the help of volume and price analysis, you have to determine whether the current breakout that is happening on the chart is the one that has high odds of success. Now these 2 points we will emphasize upon as we move forward in the video. So before we move forward, we would require one more indicator on the chart, and that is of comparative relative strength indicator. For including the indicator on this chart, go to the Pine editor and paste the code that I have left in the comment section. So I am pasting the code for relative strength here and then add to chart. Now minimize this and relative strength line would be visible here. So through relative strength line, you're only going to see which stocks are underperforming the market and outperforming the market. Now there are a couple of fundamental data points that you have to check as well, and this is for stock selection section. And when we move to that section, I will be exactly showing you which data points you have to consider. So when you're trying to enter based on this method, you're looking for price to decisively move above the Kumo cloud and for volume expansion to set in. Now apart from this, I also like to look at what Tenkan and Kijun do once price starts moving above the Kumo cloud. So in this instance, as price started moving above the Kumo cloud, both Tenkan and Kijun started trending higher. Now this is something you have to ensure it happens. Only then you have to initiate long position. Do take a note at volume expansion here as well. This is also a must when it comes to taking entry based on this setup. Now if you open up a 15-minute time frame chart and you select any symbol, you will find a lot of whipsaws based on what I'm showing here. Now this is where the higher time frame comes into picture, and let me now show you how to use that. So let me now explain the importance of higher time frame in this strategy. So the symbol here is ICICI Bank and the time frame that you can see is daily time frame. So what I like to check as a stock filter is that Tenkan and Kijun on daily time frame should be trending higher, and relative strength line should also be sloping on the upside. So if you look at something like 22nd October, let us assume we don't have this data. Let me just scroll out the chart. So as of 22nd October, Tenkan has already started moving higher. Now Kijun, based on how it is constructed, will only start trending couple of days later. So here you can clearly see that Kijun has also started moving higher, right? So what you need to check for is both Tenkan and Kijun have clearly started moving up. If you also look at the daily time frame chart, as price has moved above the Kumo cloud, clear volume expansion is also visible. And at this point, 22nd October, if you see, look at how relative strength line is structured. clearly it has moved up. Even if you check for a period of couple of months, relative strength line is clearly trending higher. So what this tells you is that ICICI Bank is outperforming the broader market, and these are the stocks that you have to focus upon when you're trying to swing trade in the market. So there will be these instances where price is above the Kumo cloud and Tenkan has started moving up, but Kijun remains relatively flat. If this is the case, you can still select the stock. Do take a look at Chico as well. If Chico is also trending higher, then this certainly qualifies as a valid swing trade. So a combination of rising Tenkan, price being above the Kumo cloud, and relative strength line moving higher is one of the basic conditions that has to be met when you're trying to swing trade based on this Ichimoku cloud method. So based on what we saw in the previous slide, let us now see after 22nd October how entry could have been taken based on what we discussed. So let me now switch back the chart to 15-minute time frame chart. And let us now move back to 22nd October. So this is 22nd October, and this is where on a daily time frame chart, the overall structure of ICICI Bank as per Ichimoku cloud is positive. So a couple of sessions later, price is trading sideways and we don't get a valid entry yet. But do take a note that Kumo cloud is positive and price is trying to head higher and take support within this Kumo cloud. So as we move forward on 25th October, we get this wide range candle on the chart with volume expansion clearly visible in this region. If you take a look at from where price has started rising higher, it is exactly at the Kumo cloud level. Do take a note at Chico as well. It is also trying to move higher and price is above near-term resistance level. So based on whatever we discussed, this certainly qualifies as a long entry trade in the market. Now, once you've taken entry based on this method at around 460, 462, your stop loss is set at 450, which is the Senko B level. So a couple of sessions later, price does start to move higher and the Senko B is violated at this level around 470. So as a swing trader, many of you would question that when we are entering around 462, we just get to make about 10%, that is 2% gain. So this is where your own risk to reward preference would come into picture. And let me just explain this. So when you're taking entry at 462, your stop loss is set at 450. So stop loss is roughly of 12 rupees. So when price starts moving from 462, it makes a high of 480. So from 462 to 480, you are making about 18 rupees. Now, many swing traders start to exit trades once they get 1.5 times of what they are risking. That is in terms of R multiple. Now, I have discussed this concept in great depth and the R multiple video is something you should watch for sure. I will leave a link for it in the description box below. So what I like to do in swing trade, and again, this depends on the larger cycle that is playing out, I always use these strong candles to offload some of my positions as price is moving in the direction of trend. This is mainly because at 480, I don't think anyone can tell you that 472 is going to come up in the next few hours. Which is why when you start using these wide range candles to start exiting 5, 10, 15% of your positions, you're actually booking out profits as price is moving higher. So this is called something as staged exit. And this is something you should definitely look at if you are a swing trader in the market. So essentially, when you're trying to swing trade this strategy, you only have to look at two things. Number one, on a daily time frame chart, trend has to be clearly on the upside or on the downside. That is if you're looking to short sell. And number two, when you move down to 15-minute time frame, you need to wait for a fresh trigger in the market where candle is pretty strong and is backed by volume expansion. So these are the only two criteria that you have to sort of check before you're trying to take long position in the trade. And stop loss naturally has to be set at Senko B level. That is when you're initiating the trade. Now there is one more way you can exit early, and that is to use Kijun as your trailing stop loss. Now in this trade, had you entered at this point, that is somewhere between 460, 462, you would have got exit based on price moving below the Kijun level at 475. Now, had you used Senko B to trail your position, then your exit would be somewhere around 470, 471. So this is another 1% here if you prefer exiting based on Kijun. So let me now show you what is the importance of again referring to a higher time frame. So based on our higher time frame, we saw that trend for ICICI Bank was clearly up, and therefore we got an entry and we took an exit based on your preference. That is whether you prefer to exit at Kijun or at Senko B. So let us see what happened couple of days later. So price started moving here, and in this region you again get a fresh breakout, or price is trying to attempt to move higher on back of volume expansion. Mind you, during this entire duration, trend on daily time frame is still up. So the important question is, do you enter at this level, that is at 470? So when I am trading, I would not prefer to enter here because in my opinion, this is not a strong structure. Kumo Cloud is still moving lower. There are odds that price would again reverse. Yes, volume expansion has happened, but if you look at this candle, volume expansion is visible. But on the fourth candle here, again, volumes are on the lower side. So I would not prefer to enter, and I would wait out to see what happens over the next 2-3 candles. So a couple of candles later, price does start to retrace back again. So when I see this happening, it is again retracing back within the Kumo Cloud. And do note here that based on what we discussed in part 1 of Ichimoku Cloud series, Kumo Cloud always acts as a strong support or resistance in the market. So when I see this happening, I would draw out a resistance line at around 472, and I would then want price to cross that resistance region, and then I would prefer taking a long trade in the market. So let us look at what happens in subsequent sessions. So in this part, price is trying to move higher, but this candle is not entirely positive, and I will refrain from taking a trade here. Again, the volume expansion is not visible. Rather, price has opened at 474 and it has closed at 470. So again, few sessions later, price starts consolidating sideways and it starts to move lower. Now, while this was happening, look what happens couple of hours later. You then get this wide range candle which takes out the previous pivot level that is marked on the chart, and look at the volume expansion here. Volumes have clearly expanded in the direction of price move. And do take a note here that this is 15-minute time frame, and trend on higher time frame, that is daily time frame, is still up. So this does qualify as a long entry here because Senko A has also moved above Senko B. So the Kumo Cloud has turned green here. This was the Kumo twist level. Again, this was a concept that we discussed in part 3. In case you have missed those videos, do watch it. So for me, this is a valid trade at 473, and initially I would set a stop loss at 466. So that's a difference of 7 rupees, and I would attempt to go long in the market. So post entry, now take a look at what happens. Price has one more breakout candle. Again, volume expansion is visible, and then price starts to move higher. So in between, price again retraces back and takes support at the Kumo Cloud. So this is one more case of price taking support at Kumo Cloud, and then it again starts moving higher with momentum. So this is a common template that plays out again and again, wherein you have to refer to the daily time frame chart for trend and then move down to a lower time frame chart to see whether there is a fresh entry available in the direction of trend. So this was a pretty recent trade, and as of now market is open and ICICI Bank is trading at 490. So based on the swing setup here, entry was at 472 and the Senko B got violated at 486. You don't necessarily have to be in the trade till the point Senko B is violated. It is all about risk reward here. So once you're entering at 472, your stop loss is at this point, that is 465. You can even take a stop loss at Senko B level, that would be at 468. So 472 minus 468 would be 4 rupees. So your initial risk is 4 rupees. Now assuming you are at this point, that is at 482. So you're making about 10 rupees with a risk of 4 rupees. So in case you are carrying the trade further and you are somewhere at this point at 486, you're making 14 rupees profit by risking just 4 rupees. So it all depends on how you are assessing risk reward, and you can time your exits based on that. So too many traders try to anticipate where the price would move. What I would suggest is, instead of focusing on where the price might head, you can use your own risk reward data to analyze where you typically exit your trades, that is at 2 times risk, 3 times risk, or even 4 times risk or higher. As far as I am concerned, Once I am inside the trade and trade moves about 1% higher, I then use all these strong candles to actually offload some of my positions so that I am exiting as price is moving higher. And then I look at my R multiple data, that is how much I'm risking and how much currently I'm making. And based on this data, I make a better informed decision. So now that we have understood the basic setup, let me now move to the stock selection aspect. Now, stock selection quite often is as important as the strategy itself. And therefore, I wanted to show you a couple of basic criteria that you should follow in order to select which stocks you have to trade based on this Ichimoku Cloud setup. Now, in case you're trading US markets or UK markets or any other market apart from our market, you can use such screeners in your own market segments to identify these basic fundamental data points. So the first step you have to do is just go to screener.in. I think you will have to open up an account. It's completely free. The first criteria that I would put up is market capitalization. So let's say I'm taking a market capitalization of greater than, let's say, 1,000 crores. So once you run this query, look at the number of stocks you get. So this is 673 stocks. Now this is where the actual problem comes in, because it is not practical to follow so many stocks. And therefore now we need a better method to filter down to about 10 to 20 stocks that we have to keep in our watch list at all the time. So the first modification that I'll make is to this market capitalization query. I would now set this at 10,000 crores. So the basic criteria that a company should satisfy is that it should have a market capitalization greater than 10,000 crores. So once you run this query, you then get about 217 names. So 217 is still better than the 600, 700 odd names that we just saw. So now what I'll do is I'll add one more filter, that is debt to equity should be less than 0.5. Once you again run this query, you would then get 124 names. Again, it's almost half of what we just had. I would then set up two more criteria based on profitability and return on equity ratio. So profit growth, I would want greater than 10%, which is very nominal. And return on equity, I would want somewhere closer to 25%. So this is what defines good companies, that is consistent companies, and such are the companies we should be focusing upon. So there you go. From 600 odd stocks, we are now down to only 19 stocks. So if you look at all these stocks, these are relatively good stocks and are sort of low volatility stocks, which kind of make a good combination when it comes to swing trading. So in this case, just by applying few fundamental data points as criteria, you have reduced the number of stocks that you track from about 600, 700 to just about 20 names. Now, other than these stocks that have shown up on the screen, I would definitely include the entire banking sector space, that is the main stocks in the banking sector. Now take, for example, SBI, HDFC Bank, ICICI, even Axis. You can even include Kotak Mahindra Bank. It's a wonderful bank. So all these stocks I will again add on top of these stocks that I've got. Now I'm doing this mainly because I have a set of low beta stocks here, and I also want to track high beta stocks. So for high beta stocks, I would take market leaders of banking sector, financial sector, energy sector. So Reliance would qualify for it, and infrastructure sector. So that would be stocks like Larsen and Toubro. In automobile sector, I would look for Tata Motors, Maruti, and in the steel sector, I would look at Tata Steel and Hindalco. So once you do this, you would have about 30 odd names that you need to track on a daily basis. And you can just use a website of tradingview.com to just go through a list of stocks which are on daily time frame in an uptrend. And then you can go down to 15-minute time frame charts to see which stocks are qualifying for a long trade. So while trading this Ichimoku Cloud strategy, you have to make sure you follow the essential steps that are required to identify high probability trade. So the first step would be the stock selection steps that we just saw in the previous slide. Once you are down to about 30 stocks, the second step would be to then go to daily time frame chart and check for wide range candles, volumes, and relative strength line. It should be clearly sloping up. And once you identify the trend, you then need to come down to 15-minute time frame chart to identify such candles which are clearly moving above the Kumo cloud with volume expansion. So these are the essential 3 steps you have to undertake when you want to trade this strategy successfully. Other than these 3 steps, I would strongly recommend for you to not add any more filters, because within itself, Ichimoku is a complete trading strategy. And once you combine all these simple filters that I've shown you, you will get a very good method for swing trading. So do check out the remaining swing trading videos I've done. I've done about 15 videos where I've explained various aspects of swing trading. Link to all those videos would come up towards top right end of your screen.